Inflation is a normal thing to happen at all times. What's alarming is when it goes above a certain level. This means that our wealth can't keep up with the depreciation tempo anymore. So if you have some savings, you might want to invest them one way or another to preserve your capital's worth and preferably grow it. But some assets are more profitable than others, so they can do a better job at beating inflation during a crisis. Let's see what they are. Hi, it's Robocash investment platform, and we're happy to welcome you on our channel. One thing you can do is invest in stocks, or better yet, invest in ETFs. These are well-diversified portfolios designed by market professionals to hedge risks through diversification. What else could you wish for to protect your capital? According to recent studies, although stocks may not be so effective against short-term inflation, in the long run they show really good results. Another useful option to hedge inflation is P2P lending. It might sound a bit untraditional, but P2P lending may be a real saver in times of crisis. First of all, since it is a relatively young alternative investment which is still considered risky, the platforms usually offer returns far exceeding the key rate. On Robocash, for instance, investors get an average of 11% per annum, and the highest you can get is 14.3% per annum. Another reason why P2P lending is good for preserving your capital in a crisis is that the returns are predictable. With most popular investment types, your capital depends on the value of the underlying asset, and this value fluctuates with time and is affected by many factors, including inflation as well. With P2P, on the other hand, you get to invest in loans with a fixed interest rate, which will not change until the end of the term. So it's good for steady and predictable growth. Up next, gold. Commodities such as precious metals show a good performance in crisis, although they do require long terms for investing. Gold is historically one of the best defensive assets and is still one of the best options to protect your capital from depreciation. Just remember to buy it not in actual gold bars or as jewelries, but instead opt for buying gold through your broker or bank and keep it somewhere no one can touch it. One more healthy option is investing in gold ETFs. However, some studies show that gold can actually help you increase your capital over a very long period of time, around 100 years. Another commodity you can invest in is real estate. Why is it a good hedge against inflation? Well, first of all, people need homes. Whatever the economic situation, it is hard to imagine that people stop buying or renting places to live. Then, with the growing inflation, houses as a commodity will also rise in value, and matching the value of our capital to the inflation rate, and possibly beating them, is exactly what we're looking for. So, if you invest in real estate, you can not only preserve and grow your capital, but also get dividends if you rent it out. What investments do you think we have missed? Let us know in the comments down below. All crises are hard, but with a cold head and a well-designed strategy, you can not only keep your money's worth, but also boost it. Thank you for watching, and remember to subscribe for more videos about investing and financial literacy.